Well, OpenAI has quietly launched a new initiative called Project Mercury. They've assembled a team of more than 100 former investment bankers to train its AI systems to automate the manual, very time-consuming tasks typically assigned to junior bankers. According to internal documents that have been reported by Bloomberg, the contractors, many of whom previously worked at Morgan Stanley and JP Morgan and Goldman Sachs, are building and refining financial models for transactions like restructurings and IPOs. Well, from dashboards to decisions, today we're talking about creating tangible value from data in investment banking. It's not the hype, it's certainly real, it's happening. I'm Michael Avery, and this is the Monocle Banking Podcast, as always, brought to you by Monocle Solutions. My guest today is Prashant Rijhumal, who's a Chief Data and Analytics Officer at RMB, an actuary by training who spent the last decade and a half turning credit analytics now into a commercial advantage through AI, and something, Prashant, I'm very, very excited to talk to you about on the Banking Podcast. So welcome, firstly.
Yeah, thanks, Michael. It's an absolute pleasure and privilege to be here with you.
Really is the gritty stuff that we're going to get into today. So, if you care about turning models into margin and insights into outcomes, you've come to the right place. But Prashant, just talk to me about your career so far. You've had a very interesting trajectory. You've moved from actuarial science into credit analytics, retail banking, now leading data and analytics at RMB. What drew you into this space?
Yeah, so I completed my actuarial studies at WITS, really enjoyed it, but never really saw myself going down a traditional actuarial path. So despite completing my exams and qualification, the banking space really interested me. I started my career in group credit risk management, in enterprise risk management in First Rand, where I've spent my entire career in the wider group for almost 20 years. And it was a great initial place to start to understand the wider bank, all the way from the corporate and investment banking side of credit to the retail side of credit, and obviously small and medium businesses in between. But what I realized after some time is I really wanted to be at the coalface where decisions were taken within the business areas and to actually understand the businesses rather than sit outside those business areas. And that led me to joining some of the different retail business units, namely F&B Home Loans, F&B Consumer Core Banking, and F&B Credit Card over periods spanning, for example, 6-7 years, I'd say, looking after different elements of the credit value chain or the entire credit value chain in some of those cases as a head of credit, where we really used data and analytics to see how we can improve outcomes for the business, whether it's margin optimization, improving access to credit, particularly in the lower income segments, whilst making sure we still create shareholder profit value. It really was an amazing learning experience for me and definitely a very enjoyable time in my career. And soon after being in F&B, RMB approached me. And interestingly, Emery Brown, now CEO of RMB, I'm not sure if she knows this, but I actually only took the call out of sheer respect. I had no intentions of moving. But I then went and spoke to my wife that evening and said I'd be a complete idiot to not take the job, given RMB's vision in terms of how they want to use data and analytics. And I guess the rest is history. Yeah, my time in RMB has been great. We started off with very little in terms of formal analytics teams. And we've now grown the teams, not to astronomical sizes by any means. We're right-sizing the teams for the different business areas. And about a year and a half later, Emery, when she was appointed as CEO for RMB, took a very big step forward for RMB in creating the CDAO position, which I then have the privilege of fulfilling. So yeah, it's been a really great journey, but ultimately throughout my career, data has been at the cornerstone of what we've been doing. I guess personally, I've had to evolve a little bit from simply validating models to then building models to now being responsible for the entire value chain of data from where it's created into how it finally gets to an end consumer with information governance, architecture, etc. around it. And it has been an incredible journey, and the group has given me many opportunities.
And I recall chatting to Dr. Christoph Nivot about his time also in the retail bank and grappling with models when you're going to use these things and their explainability. If you're going to use it for credit scoring, for example, if you're going to deny access to credit, how explainable is the model? How can you deploy it? So very, very interesting. I think many executives years ago saw data as some kind of support function. And what you said about Emery is so important, because when she came in and took over from James Formby, she really realized that data has got to be very central to the way the bank operates. In your career, when did you see that shift from data being kind of maybe a core support function to really key and center to the strategic thrust of the business?
In truth, for most of my career, that has been the case, because in retail banking, data became a key decision maker around the table quite some time ago. Retail banking had to evolve into using automated scoring methodologies a very long time ago in order to process credit applications at scale. And of course, we know that F&B has always been one of the innovators in terms of access to credit and scoring methodologies. So in my time in F&B, there was never really a question about whether data had a seat at the decision table or the importance of data. I think heading into R&B, as you say, Emory really wanted to elevate the profile of data to make sure that we can get the best out of data, not just for how we manage our business internally, such as to get efficiencies within the business, but also how we understand our clients so we can better service our clients, give the best of R&B to our clients, but also how we use data to actually help our clients. And we've done different projects with different clients on where there's been a good alignment of what the client's looking to do, and we can help from a data perspective to help them also look at how they can meet some of their strategic objectives.
What did you need to do when you then first took over in that role in terms of the entire data architecture to position the bank to be able to deliver that kind of value to your clients? Was there still a lot of structuring work that needed to happen behind the scenes from an architecture perspective?
So when I joined, credit to the people before me, some of this work was already ongoing in terms of delivering insights directly to clients. I think what needed to be done was making sure that we did it in a manner that made sense internally by assessing sort of the pros and cons of each of these projects that we take on and how we engage our clients in those. But also, as you mentioned, it's not good enough to simply have data provided to you by someone, which you take as correct, and then using that to tell a story. It's important that you take full accountability for the end-to-end data, make sure you're using data from authoritative, reconciled sources where you have full explainability of the lineage, where the data comes from, so that when we are advising our clients, we have full confidence in what we are advising them on. Also, things like how our clients interface with the data. Typically, when you start something off, there are informal ways that you may choose to disseminate information. For example, password protected PDFs or entrance via a authenticated SharePoint website or the relevant controls, etc. in place. But what we then also started exploring was giving them interactive ways in which to interact with the data itself and slice and dice the data themselves, all of which needed to be done in a very controlled manner because we're talking about sensitive data that we're then sharing with our clients.
So that then sits in your own ecosystem. Tell me how you've approached that, because I know there's obviously a lot of concern about going into the cloud. And we saw recently Amazon Web Services go down, and you have the single point of failure was the Reserve Bank's flavor of the year, I think, as well, third-party risk. So how do you go about, building that with the kind of confidence that you need in order to deliver?
Yeah, so I think all large companies in the world today are reliant on a number of the major global tech players such as Microsoft, Amazon, etc. So of course, for some of these services, we are reliant on individual players. Some of the elements do sit within our ecosystem. Maybe this actually isn't a place for me to talk. It's more in the technology space.
Yeah.
But I guess the point is that it all sits in a manner that properly meets all of our security policies, procedures, etc., to make sure that data exfiltration wouldn't be possible.
Yeah. And I do think it's a concern globally, though. And no one company, corporation has really got their hands around the fact that there are a couple of hyperscalers in the world that really are key choke points. Until you build your own cloud hyperscaler, there's nothing else really that we can do.
Yeah, so I think what we try and do, particularly in the data environment, is make sure that you've got the ability to plug in and plug out, and that obviously you've got a redundancy where it's necessary on critical business processes. So as an example, if an undersea cable gets cut, we hope that there's redundancy for us to still have connectivity.
Yeah.
It's similar with the different providers that we use. So those layers of redundancy are quite important to making sure that business critical operations can continue.
Yeah, and it was interesting. We were chatting to Resilient Innovations on the podcast, and some of the new redundancy options that are now terminating beyond just CCOM and the other cables that we're aware of, all very important in providing that layer of confidence. Now, we were chatting before we started this recording about artificial intelligence and just how rapidly it's developing. And I saw in the FT recently the first fully digitally native AI-backed investment bank. It's called Off Deal, and it pretty much handles the entire stack of investment banking. Where do you see the big opportunity for the new technologies like artificial intelligence? Is it in managing those mundane reporting processes, automating a lot of that on the back end? How are you thinking about the application of AI?
Yeah, I think that's a great question because I think a lot of people are grappling with where the real value is. I think if you look in the media these days, you'll see a lot of naysayers now saying, actually, we're not seeing the value that we expected.
Yeah.
It's hype, etc. I think a big part of the challenge is a lot of people are looking at the way things exist today and the way things are done today and saying, okay, how can we use AI in the way things are done today? to supplement the person in the seat. Okay, the person in the seat can ask AI for some research on a company. The person in the seat is still the one with the control and doing everything that's required. I think what's really important is that we start looking at how we completely re-engineer some of our business processes from the ground up, or reimagine our processes, as I like to say it. I think an example is if we just take an existing business process that has steps A, B, C, and D. I guess one good step would be what a lot of people are doing is, okay, there's a human in step A. Let's give the human some better tools to perform step A. An even better step would be, okay, let's remove the human from step A and let's get artificial intelligence to perform step A altogether. And maybe a human is supervising step A, if at all. A step further would be let's introduce an agentic workflow to handle as much of that business process as we can. Reimagining a process is, why does that process need to even look that way at all? Is there not a way to redesign how this works? Remember, there are a lot of processes, particularly in banks that have existed for quite some time, or any company that's existed for quite some time, have been built on top of each other with time. A step on top of a step, on top of a step, and on top of a step. I think it's about time with some of what we're seeing now with AI to really think about how we can, A, make those more agentic in nature, and B, rethink some of them.
And it feeds into the Nobel Prize for Economics winners, the 3 winners this year who were awarded the prize for building on Joseph Schumpeter's work of creative destruction. And at a kind of broad macro level, identifying, what successful economies do well. And they tend to create environments where innovators, disruptors can come in and look at a process like you've just described and said, well, why do we even do it that way to begin with, given the tools and the technology that we have available today, rather than just doing the same process but digitally? So it's a very exciting time. Equally, what are you finding as, and this is a very broad question, but as a concern when you talk about maybe taking a human out of step A or seat A? I know a lot of concern in the professions is about what that then does to the pipeline of talent that comes through. And very often junior investment bankers are doing that kind of, call it grunt work in step A. And now the challenge is, how do you build that pipeline of talent and skill if you're going to be removing them?
Yeah, Michael, my first thought when you say that is, I think the point is valid. As financial institutions, what's core to our offering to our clients and our value proposition is trust. So I think before I even think about the impact on pipeline and talent from AI, which is of course incredibly important, it is we need to be incredibly responsible in how we approach this topic when considering our role in South Africa as a financial institution. What I mean by that is not that we shouldn't be understanding how we can use AI and we shouldn't be improving the way things work. I mean, if we improve the way things work, it creates shareholder value, it improves customer experience. So it does create value all around, but we can't afford to too quickly remove people from processes where we don't have a very good sense of what AI will and won't do. I think a lot of the guardrails are currently being put in place for those to be managed, but I think there still is quite a bit of uncertainty in that space around making sure there's full visibility, full explainability. I mean, in some cases, for example, a customer onboarding process, we'd need to be able to evidence everything not only to a customer, but to a regulator. And there's obviously very critical steps in that process that needs to be fully met with compliance requirements, etc. So maybe being from a financial institution, that's the first thing that comes to mind. I think the talent point that you make is quite important. I think what we are on the cusp on is a potential revolution, much like we've had the Industrial Revolution prior. And what we've seen happen through these different phases globally is there's been a change in terms of what it is that people do, how jobs look, what the workplace looks like, what the workforce is required to do. I'm not saying that we're on the cusp of that happening in the next 2, 3, 5 years necessarily, but I think that what we'll see with time is that the entire way of work starts to shift. We'll start seeing that certain jobs are more important than they were before, certain jobs are maybe less important than they were before. But like you say, we now have, for example, a head of legal in an organization that had to go through certain experiences in order to get to where they are, which included what you referred to as grunt work, and perhaps work that AI might be able to do in future. How will that person now get the same experience? Well, maybe they won't need the same experience because AI will be doing some of the heavy lifting for them in future.
Yeah.
I actually had a conversation with a team member the other day saying they referred to us getting lazy by using AI. I said to them, do you consider someone lazy when they use a calculator to do some mathematics?
Yeah.
Do you consider someone lazy to use something to transcribe their voice rather than have to take down the notes all the time? No, these are productivity tools. So we need to be careful, of course, But I mean, AI in many ways is simply another tool that we need to be smart about using to get the best for ourselves. And I mean, given how AI has been spoken about today, for the world.
Yeah, and I was amazed, back to the Agentic AI example, when hosting an AI and financial services panel recently at the law firm Bowman's. We had Ricardo Rosa of Microsoft on the panel, and he said, forget 2025 being remembered as the year of Trump and tariffs. He says we're going to look back in the broad sweep of history, and 2025 is going to be the year of agentic AI. He said we haven't fully really understood at a broad level. Maybe, those who work in the industry certainly do, the power of this technology. But we've moved on from consumer grade large language models that we all use, like ChatGPT, and asking it questions and getting it to do research for us, into building teams of these agents that can be supervised and then used to replace all of those little microprocesses to deliver a project and an outcome. And there was a great example that was shared at the event. And I think most of the attendees were just left absolutely slack-jawed. We're moving beyond RAG and retrieve, augment, generate to something entirely different. Where do you see the early use cases for agentic AI in R&B?
So again, keeping in mind that we need to be quite careful around how we introduce agentic AI, I think one needs to identify where the most inefficient processes exist, where the biggest cost is being consumed, where the biggest resources are being consumed, in order to look at where possible applications would be best prioritized. I think if we look at different firms, they'll have different pain points. Some will have pain points around, for example, a very inefficient customer onboarding process. And that may be the best place to put this behind, because a company has invested hundreds of millions a year behind having humans perform the entire process, which obviously needs to be weighed against sort of the risks from a regulatory point of view. Another company may have very inefficient back office payment operations fraught with risks because of incorrect payments consistently being made. And that may be a good place to prioritize putting agentic workflows in place, again, whilst making sure we have responsible controls, etc. So I'd say, without maybe getting into the detail of R&B and where some of our processes have some room for improvement, that's the way that we're looking at approaching it, is to say, where can we get maximum value whilst also getting quick delivery that isn't going to be hampered by the amount of red tape that we would rightfully need to go through in order to implement something.
Yeah, I mean, we have to bear in mind that banks are amongst the most highly regulated entities on the face of the planet. But if you just think about some of the scandals of the last decade, we've had the LIBOR rigging, we have had credit model explainability issues and concerns around internal bias that's potentially coded into a model. And obviously, the danger is not just technical. Inside an organization, it's cultural when you implement these systems. So how do you build a governance culture around data and AI inside R&B to embed that kind of ethical and responsible use of the technology throughout the organization? Does that start at Emory and then filter down?
So I think we're fortunate, again, as a bank who's been using models across the entire organization, even into F&B for many years. We've got very strong governance processes in place, because many of the questions that you ask will have applied already to things like credit models today. So we've got strict controls, policies, procedures throughout our model governance lifecycle that we invoke as models depending on sort of their relative risk to the overall organization and our clients, which we assess against, which is governed all the way up to a subcommittee of the board. So the solutions that we're bringing in now from an AI perspective, I guess what we're grappling with now is the extent to which they fall within the ambit of traditional models. And we're then looking at scaling those similar governance, controls, procedures, etc., into AI to make sure that the same practices that we've put in place to limit things like bias, make sure explainability exists, we don't lose by misclassifying AI as something other than models.
Yeah, and I know there's always this tension between building advanced in-house capabilities and buying external solutions or partnering. How do you decide where R&B should invest internally versus where it should be plugging into a kind of wider fintech data ecosystem?
Yeah, so I think as R&B, we don't shy away from partnering where we know that there is a good opportunity. Ultimately, what we all know is that if you are going to build in-house, it's going to take time before you get value. And also, there are certain firms that specialize in doing one thing. They've got to be the best in that one thing for that firm to exist. For us to assume that we can be better than all those firms for everything that we possibly need, I think would be quite arrogant. So I think it really is about making sure we understand the economics. So obviously, where buying is far too expensive for us to look at in terms of what our investment spend would allow for. We may need to look at building, but obviously where the cost benefit profile makes sense, we may also then look at buying. For me, it's no different to any other application or solution we look at today in R&B, where again, we would have a combination of in-house built applications versus applications that we buy and have supported by external parties.
And I'd imagine then when it comes to measurement, that feeds into how you're measuring the ROI on a particular project and where you're deploying this technology. How do you track return on investment on a data initiative in the bank?
So in R&B, return on investment on a data initiative is quite challenging. So if you look at some of our more consumer-facing businesses where things are heavily automated, it's quite easy to measure return on investment. So back in my credit days, if we decided we were going to implement a new model, it was quite easy to say, okay, we've got a fully automated customer approval process.
Yeah.
So we can look at what the approval rate is. We can look at how margins are changing. We can look at how sales numbers have moved, etc. And you can quite easily get a feel for what a change or a project in that sense has resulted in terms of benefit. In the R&B space, a lot of the, if not all of the work that we're doing that's sort of analytical and data related still feeds into a person who will ultimately make a decision or use that in order to do something. So an example might be, I spoke about some of the new technology that we're using to identify sort of opportunities with our customers. That will still go into a team of bankers or a lead banker, say, who will then have an engagement with the customer around possible opportunities. It wouldn't say what you might have in the retail world, automatically trigger a notification to the customer that, who knows, they have been pre-approved for something, click on this link to take it up. So we're still very much in a relationship-based world, and therefore most of what we work on still has more than, I'd say, a human in the loop. It's very human-led.
Yeah, well, and that's the thing, investment banking is still fundamentally a relationship-driven business. So how do you then see data and analytics enhancing rather than replacing that human side of deal making? And you don't have to give me the details of any project you've worked on, but broadly speaking.
I mean, R&B not so long ago had a marketing campaign. I think it was focused on why not both, sort of looking at two sides of a coin. Internally, in some of our own communications, we had something very much talking to that. It was best of breed expertise, talking to our bankers, data-driven insights, two sides of a coin, why not both?
Yeah.
And I think that really is the way we see this moving. What we've launched most recently, just this month, is a data literacy program across the entire R&B, supported by the R&B and business leadership teams, not just into the customer-facing banking teams, but into all of the back office teams, effectively approximately 4,500 R&B employees. We want everyone across R&B to understand better how to work with data, how to use data to improve the decisions that they make in their daily jobs, and how to also make their lives easier and their jobs easier by using data. So ultimately what that means is everyone in R&B will have a different way in which they can use data to make their lives and their client lives better. If we look at the front office banking teams, which is, I think, more what you were referring to, I think what we want to be able to equip them with is better, quicker insights into what's happening in the industries and sectors. Of course, some of that can be scraped from things like news articles, public financial statements, etc. But there's also information in terms of the activities that our customers are conducting that we have around the activities in our own data.
Google Analytics, for example, giving you hotspots of frequented areas of consumer demand.
Well, interestingly, we can do some of that ourselves, right, using our own internal retail banking information. But I mean, just as an example, let's take a very simple example. If we saw a client conducting a certain type of trade, that might be useful in flagging up a hedging opportunity on the other side, which might in turn flag to us that the customer now might be engaging in a certain type of transaction that they didn't before. Maybe there's something changing in their business and we should engage with them around Forex. Also, all I'm trying to say is that activities on customers' accounts can flag for us good opportunities that we can potentially put forward to our client-facing teams so that we can remain as relevant to our clients as possible. Again, it's not just the account behavior. It's also whatever we can get in terms of information from the internet, because I think expecting every single frontline banker to be fully abreast of everything that's happening to every single one of their clients in real time is impossible. And that's where we have a massive opportunity to help them make sure R&B remains relevant to the clients.
Yeah, I mean, I can imagine in a live negotiation, bringing it back to kind of the deal-making side of investment banking, the time pressure is obviously enormous. So I could imagine a future where deal teams maybe have AI co-pilots in the room surfacing real-time scenarios, valuations, counterparty signals, all of that. But it's just surfacing the information. It's the human that's got to use their intuition, their judgment at the end of the day.
100%. And I mean, one of the initiatives we have looked at is how to, maybe not real time in the session, but at least prior to sessions, helping equip our frontline bankers to ensure they've got as up to date and as much information as possible without them having to go through all the hard work of doing that, which could take hours or days,
Yeah.
which we could rather provide for them in minutes so that they can rather spend time understanding the customer better and understanding how we can service the customer better in those sessions.
So if you were to just imagine the banker of the future at RMB, what are the skill sets that they're going to need? Because I'd imagine we really need to be very T-shaped, maybe a deep specialization somewhere, but that broad knowledge of the data environment and systems that we're using.
So, I take it back to the example I gave about using a calculator. I think today, it's funny, I was going to say today everyone knows how to use a calculator. I'm not sure because we moved beyond the calculator. At least when I was younger, everyone knew how to use a calculator. You sort of had to use a calculator to do mathematics at school. Today, any person who is in really any corporate environment knows how to use a computer.
Yeah.
If you don't know how to use a computer, you're going to fail. But guess what? 50 years ago, computers didn't exist. I actually remember a funny story from Yuri Bester, who was on the board of First Rand and who I worked with a bit in my enterprise risk management days in the group. He relayed to me a story about how when he was younger, they used to use physical graph paper to plot out data points and then sort of by hand try and fit the best possible curve. If that's what we were doing today, okay, if I tried that, I think people would think I'm making a bit of a joke. So I think very much in that light, being able to work with data in a manner that isn't just consuming reports, but actually working with the data itself to provide one's own insights, to be able to code, to be able to problem solve and predict what's going to happen, for me, is going to become quite a wide skill set that's going to become sort of ticket to the game for many roles across the world. Whether they'll get that deep into core frontline investment bankers, I can't say for sure, but that's really the way I think the world is moving. Coding becomes the new calculators, effectively.
Yeah.
At the very least, I think in the very short term, rather than too far into the future, I think everyone needs to start getting familiar with the AI tools that are available. Because the way I think about it is people are worried about being replaced by AI. In a world like ours, where it's still very people-led, in the short to medium term, I don't think a lot of those people are going to be replaced by AI. I think they're going to be replaced by people who use AI.
Yeah.
And I think that's the real danger. So for me, people who turn their nose up at the possibilities of what's possible here, they're in trouble.
Yeah. Well, it goes back to my example of off deal. And listen, there was a great video with Jeff Bezos recently being quizzed about whether or not we're in an AI hype bubble. And he says, absolutely, there is a bubble. But there's a difference between an industrial bubble and a financial bubble. He says often you look at past industrial bubbles, everything gets funded, the good ideas and the bad ideas. So, you're seeing anyone who's got a remotely good idea is getting funding. Will they succeed with it? Well, we don't know. But, what you're left with at the end of the day, not everyone's going to be a winner. Not everyone's going to see a massive return. But there are tools and business processes and new ways of doing things that are societal good. And that really feels, for me, intuitive as to where we are today. So yes, there may be a bit of a bubble, maybe a bit of a hype. And guys like Offdeal are raising funding to start an AI native neobank. Will they succeed? Well, we don't know. But, it's those who are trying with the tools that ultimately will be the winners. We don't know which of them will be the winners, but that's probably where I'd be putting my money.
Yeah, I agree. I think for me, some of the concerns around the hype is if you look at a lot of technological advancements that have been achieved in the past, there's sort of been an end to we know that this is what this is. We're delivering X and cool, this is what it is.
Yeah.
I think with where we are with AI now, there seems to be quite a blurred or fine line between the tools that we want to make available for people using, you referred to sort of what we'll call basic RAG these days. It wasn't so basic just a couple of years ago, but basic RAG these days. And in the same conversation, we're talking about artificial general intelligence, which is a completely different thing altogether. And I think that's where things really, I don't know what the word is, make people worried, make people concerned.
Yeah.
I think that if we had a conversation that said, all we're doing is we're going to use basic RAG, and that's where the tool set of what we're building ends, and the next thing is another conversation, people would feel a lot more comfortable. But I think because it's all very intertwined, people don't know where it starts and stops. And I think that's also where the danger is. Where does it start and stop?
Yeah. Leopold Aschenbrenner wrote situational awareness, I think, last year as treaties. It was very much kind of a Silicon Valley thing. You write this treaties manifesto where you think things are going. And one of his main points, and it's echoed by a few who are very close to this technology, is that AGI is possible. And in fact, we probably will achieve it in the next 5 years. And if that is the case, it is something of an existential arms race. And, whether or not you ascribe to that view or not, the fact that it is even remotely possible has profound implications that we don't have time to unpack today. But Prashant, just as we wrap up and, with some personal reflections as a leader, how are you building teams inside R&B that can bridge this world with, the technical depth and commercial applications? You said earlier you are conducting some kind of internal audit in the organization and trying to upskill as many people as possible.
So definitely not an audit, more, I guess, a campaign to upskill people around data and make people more data literate than we are today. I guess just around making sure we bridge that gap. Whatever we do is business-led. So what we try and do is we make sure we don't have data teams who are running around and experimenting all day with no real business alignment and objective to a sort of sound outcome. Because I think doing that brings about the risk of doing a lot, spending a lot, with no value creation that your business stakeholders can speak to. So that's very important to what we do, is making sure there's business alignment between everything that we do. However, we do need to also make sure that there is experimentation on the side so that we don't fall behind our competitors on things like AI. And that's where, in a safe, controlled manner, we'll make sure that we've got ring-fence experimentation teams to think about what we can do before we bring something to actual sort of an outcome of value. The one thing that has happened in my time at R&B, thanks to the existing leadership team in R&B, is data has a seat at the table. Data has a seat at every table. And by data, I mean that extends into analytics and AI. And I think that has been quite a profound shift. Obviously, the next steps are making sure that in everything we do, we consider data. We consider how we can use data to improve things. We consider how we can use AI to improve things. We consider the measurement using data on how things have gone in the past. I often say, if something is important enough, you must measure it.
Yeah.
If you're not measuring it, it's not important enough because you don't really know how it's improving or worsening. And data has a role to play in that as well. So it's not all about the sexy AI stuff and engaging with clients. It's also just about making sure we have our fundamentals in place to measure our critical business levers and that we understand how we're going to move those levers. For me, that's some of the foundations I also want to make sure that we have in place in R&B. Arguably more importantly than the sexy AI stuff, because that's where you need to start to make sure the foundations are in place to then build on machine learning models, trusted authoritative reports that people can rely on with quality in place, etc. AI must go on top of all of that, but we must never lose sight of the fundamentals.
Yeah, because when you're measuring, as you say, what you know to be valuable and important, then you can make decisions that are not based on intuition or gut, which, is important, but you've actually got the data, you've got the evidence. You can say, we were here, we're now there, and you can let that evidence lead you into making better decisions.
Yeah, I think simple examples of that are a customer-facing business would want to understand where customers' biggest pain points are. Sure, you could do that by asking everyone in your call center what they think, or you could use NLP to classify incoming calls to say these are where the biggest issues are. You've then got data. And as you identify the issues, put in plans to fix them, you then have ongoing measurement to understand what you have fixed. You haven't necessarily used machine learning or AI to do some of that, but you definitely need to make sure you've got the data points to measure the critical points of your business, because ultimately it's those fundamentals that are going to push your business forward. You can have AI driving something that's unimportant to the business. If it's not moving the fundamental business metrics forward, you're focusing on the wrong things.
Well, that's it for today's Monocle Banking podcast. My thanks to Prashant Rijhumal for a grounded tour, I think, of what it really takes to turn data into that edge inside the investment banking landscape, from AI governance and culture. It's beyond just coding. If you enjoyed the conversation, please follow, like, and subscribe to the show. Send feedback or guest ideas to the team at Monocle and tell us which part of the deal cycle you want us to unpack next. I'm Michael Avery. Thanks for listening, and we'll catch you on the next one.